Welcome back to our video series on corporate tax in the UAE. Today we are going to discuss a very important topic, the Ministerial Decision number 73 on small business relief. This decision has significant implications on businesses in the UAE, and we will walk you through the key provisions. So let's get started. Before we delve into the details, let's quickly understand the purpose of Ministerial Decision number 73. This decision has been introduced with an aim of providing relief to small businesses, micro businesses and startups in the UAE. It seeks to alleviate their tax burden and simplify their tax obligations, allowing them to focus on growth and development. Now let's explore the key provisions of this decision in further detail. One of the key aspects of small business relief is the taxable person's revenue threshold. The small business relief applies to businesses with a revenue threshold of 83 million for each tax period. Now it is very important to know that the availability of this relief is not for an indefinite period. The small business relief is applicable for tax periods starting on or after 1st June 2023 and continues to apply until 31st December 2026. Businesses that exceed the revenue threshold of 83 million for any relevant or previous tax period cannot apply for the small business relief. Let us understand this with an example. Alchemist LLC's first tax period is Jan to December 2024. It generates a revenue of 2.5 million AED during its first tax year 2024. As a result, it can choose to opt for small business relief and be exempted from paying corporate tax for that tax period. However, in the tax year 2025, the revenue increased to AED 4 million, exceeding the threshold of AED 3 million. According to the decision, they are no longer eligible for small business relief in 2025 or in the following tax year 2026. Even if the entity's revenue decreases to AED 2 million in 2026, they will still be ineligible for this relief. This is because they had a revenue above AED 3 million in the previous tax period 2025, which disqualifies them from availing the relief in 2026. Now let's understand who cannot apply for the small business relief. The election to opt for small business relief cannot be done by number 1, a qualifying free zone person, number 2, the members of a multinational enterprises group, MNEs. MNEs are groups of companies having operations in more than one country and having its consolidated group revenue of AED 3.15 billion or more. For such entities, the minimum global tax rate of 15% may be applicable once the Pillar 2 solutions suggested by OECD comes into effective. Additionally, this decision addresses certain conditions on carrying forward of tax losses and general interest deduction limitation rule. UAE corporate tax law provides for carrying forward tax losses for an indefinite period. Similarly, there is a provision to carry forward the net interest expenditure incurred in a tax period which is more than 30% of the current accounting EBITDA for a subsequent tax period of 10 years. When a business chooses to opt for small business relief, any such tax losses incurred in that tax period or any net interest expenditure incurred in that tax period cannot be carried forward and set off against its future taxable income. In conclusion, the Ministerial Decision number 73 on small business relief aims to provide relief to small businesses in the UAE. By opting for this relief, businesses with revenue below AED 3 million can benefit from certain advantages such as simplified tax obligations and potential tax savings. However, it is important to carefully consider the implications, particularly regarding the forfeiture of tax loss carry forward. Business should assess their individual circumstances to make an informed decision about whether to opt for small business relief or not. We hope you enjoyed the video and continue to watch our future contents on corporate tax. Thank you.